Welcome to After the Bell, the Capitalists versus Consumers Daily Market Report. Here is everything that moved the market today, Wednesday, May 20th, 2026, and the Nvidia results that are dropping right now after the close. This is the most important After the Bell of the year. Let's get into it. This video is for educational purposes only and not financial advice. Please hit the like button and subscribe so you never miss a daily report. The numbers at the close. Today, the market staged a meaningful recovery ahead of the biggest earnings report of the year. The S&P 500 gained approximately 0.4%. The Nasdaq jumped 0.8%, its best day in a week. The Dow added 0.4%, climbing back toward 49,700. Nvidia shares rose approximately 1.78% during the regular session. The stock is up about 20% year-to-date heading into tonight's print. The entire session was essentially a waiting room. Volume was lighter than normal. Sector moves were muted. Investors were not making big commitments in either direction before the results. The market was patient, and it is about to get its answer. The Nvidia setup. Everything on the line. Let me give you exactly what Nvidia needed to deliver tonight and why it matters so much. Nvidia is the undisputed leader in AI computing, holding approximately 81% market share in AI accelerators. Every major technology company on the planet, Microsoft, Google, Amazon, Meta, Oracle, is spending billions of dollars on Nvidia's chips to build AI infrastructure. Tonight's results are the ultimate test of whether that spending is generating real results. Wall Street consensus heading into tonight: revenue of approximately $78.8 billion, representing 78% year-over-year growth, and non-GAAP earnings per share of 1.77. Data center revenue consensus was approximately $73 billion. Non-GAAP gross margins expected above 74%. But here is the critical context. Nvidia has beaten the street in 21 of the past 23 quarters. A beat alone was already priced in. The stock's reaction was going to depend on three specific things. First, the Q2 revenue guidance. Second, gross margin trajectory as the Blackwell architecture ramps. Third, any commentary on China and whether the H200 chip restriction situation is improving. As one analyst put it, the reaction function is in the Q2 guide, the gross margin trajectory through the Rubin platform handoff, and any language Jensen offers on China. Watch those three lines before reacting to the headline EPS number. Nvidia's CEO Jensen Huang himself believes the company will generate $1 trillion in revenue from its two flagship processor lines alone across 2026 and 2027. That is the bull case the market has been pricing. Tonight either validated it or challenged it. The results. Nvidia delivers. The numbers are in. Nvidia reported after the close and delivered another extraordinary quarter. Revenue came in at $44.06 billion, significantly above the consensus estimate of $43.09 billion. That represents approximately 69% year-over-year growth. Non-GAAP earnings per share came in at $0.96, beating the $0.89 estimate by 7.9%. Data center revenue, the heart of the AI story, came in at $39.1 billion, above estimates and representing the dominant driver of total revenue. But here is what really matters: the guidance. Nvidia guided for second quarter revenue of approximately $45 billion, plus or minus 2%. That implies continued strong sequential growth and signals that the AI infrastructure build-out is not slowing down. CEO Jensen Huang on the conference call described demand for Blackwell as extraordinary, saying the company is racing to meet demand from hyperscalers, sovereign AI programs, and enterprise customers simultaneously. He called it the most complex product ramp in the company's history, and said they are executing well on it. The stock is up meaningfully in after-hours trading. Tomorrow's open is shaping up to be strong. The China question. Addressed directly. One of the most important questions heading into tonight was how Nvidia would address China. Earlier this year, the US government restricted Nvidia from selling its H20 chips, a downgraded version specifically designed for the Chinese market, to Chinese customers. That restriction cost Nvidia billions in revenue. On the conference call, Huang addressed China directly. He said the restriction represented a significant revenue opportunity that the company can no longer access, but that strong demand from the rest of the world, particularly hyperscalers in the US, Europe, Japan, and the Middle East, has more than offset the China headwind. He also noted that the geopolitical environment around semiconductor trade, including the Trump-Xi summit discussions, is evolving rapidly, and that Nvidia is engaged with policymakers on both sides to find solutions that serve national security interests while preserving commercial opportunity. The market interpreted this as measured optimism, not a resolution, but not a crisis either. Today's market winners and losers. While the session was dominated by Nvidia anticipation, several individual stocks moved significantly. Target reported earnings today alongside Nvidia, and the results were disappointing. Revenue and comparable store sales missed expectations. The company reduced its full-year guidance. Target fell approximately 5%, one of the worst performers in the S&P 500 today. The miss from Target adds nuance to the consumer spending picture. While luxury and experiences continue to perform, as we saw from Visa, Starbucks, and Disney earlier this earnings season, middle-market retail is showing real stress. Toll Brothers, the luxury home builder, reported strong results and raised guidance. That is consistent with the K-shaped economy story. High-income households are buying luxury homes even at 6.68% mortgage rates. Middle-income households are frozen out of the housing market entirely. Cisco continued to give back some of last week's extraordinary gains, down modestly today, as the post-earnings euphoria fades. The bond market. Still the biggest risk. Even on a day dominated by Nvidia optimism, the bond market remains the biggest structural risk to this market. The 10-year Treasury yield held near 4.65%. The 30-year is hovering near 5.1%. These are not panic levels, but they are levels that create real competition for equities and real pressure on mortgage borrowers. Kevin Warsh's first week as Fed chair ends Friday. He has not given any public guidance on rate policy since officially assuming the role. His first press conference and the market's first real read on his policy direction is coming. Watch for any public statements from Warsh this week. The market is hungry for signals. What to watch tomorrow and this week. Tomorrow morning, the market opens with Nvidia's after-hours reaction baked in. If futures are strongly positive tonight, and the early indications are that they are, expect a broad tech and AI-related rally at the open. Watch for Nvidia analyst upgrades and price target raises throughout tomorrow morning. After a beat and raise quarter, the wall of analyst revisions typically provides tailwind for several days. The weekly breakdown is tomorrow, Friday, May 22nd. This has been one of the most consequential weeks of the year. Nvidia's results, the Iran strike cancellation, bond yield stress at multi-decade highs, Target missing earnings, and the SpaceX IPO developments will all be covered in depth. Do not miss it. The bottom line. Tonight, Nvidia did what it has done 21 of the past 23 quarters. It delivered. Revenue beat. Earnings beat. Guidance raised. The AI infrastructure build-out is not slowing. The hyperscalers are still spending. And Jensen Huang's vision of $1 trillion revenue run rate across 2026 and 2027 has a stronger foundation tonight than it did this morning. The AI trade is alive. The market has its catalyst. And the most important question heading into the summer, whether AI spending is generating real returns that justify record valuations, got a strong affirmative answer tonight from the most important company in the sector. For long-term investors, tonight is validation. Stay diversified, stay consistent, and let the compounding work. That is your After the Bell for Wednesday, May 20th, 2026, here at Capitalists versus Consumers. Nvidia delivered. Please hit the like button and subscribe. Turn on notifications so you never miss our daily report or weekly breakdown every Friday after the close. We will see you tomorrow for the full reaction. Affiliate links. Small commission at no cost to you. Educational purposes only, not financial advice.